They managed to vindicate an astonishing run-up in the stock. You showed the 1 year that's up, year-to-date 100%. It's up 500% in the last 12 months. It's the best performing stock in the S&P 500, but it's also the most expensive. If you're looking at their sales forecast for next year, they're trading more than 70 times that in terms of valuation. So they needed to post this growth, and boy, was there growth. You're seeing $1 billion per quarter now. Only 3 years ago, you were getting $1 billion per year. So you're just seeing up and to the right in terms of demand. But it's full-fledged demand. It's not just from the US government. It's not just from US commercial. It's from more international growth as well. But really, you saw the US on fire, and you particularly started to see commercial adoption. Because, look, they're helping Amazon really understand their supply chain. They're helping integrate into AWS. They're getting into defense tech. They're getting into big old school companies that want to understand how they can fast track using generative AI. That's where the winning formula is coming from.
Yeah, if they rise 8% today, they're trading at 100 times sales.
Wild.
I mean, that's an insane valuation. Even if Dan is correct and we continue to underestimate their growth, they're still only going to sell for maybe $4.5 billion worth of stuff in a full year.
And that is why you're hearing Baird, why you're hearing Jefferies, why you're hearing analyst after analyst saying, we think this is great growth, but the valuation is uncomfortable. The fundamentals are getting out of whack. Yes, you can love this stock, but really you saw Alex Karp, the CEO, and he has a flavorful tongue from time to time, but he's really thanking the retail investor community. He's saying that's where they've seen ultimately institutional investors and the buy side and the sell side almost not catch up to what they think is this winning track. He's saying that they've been defanged in many ways. Some of the people who bet against him, actually only 2% of open float is now shorted. People have just fallen away from betting against the stock because they can't catch their breath. They're just racking up losses when you do bet against this growth.
Yeah, this is what the PayPal mafia sometimes is capable of.
It's a blowout across the board. I mean, look, that's why they're the Messi of AI, right? I mean, it just speaks to this is transformational, the type of growth they're seeing. And you combine that with what we saw last week from the hyperscalers, that just shows this AI revolution. It's just starting in terms of the next stage of growth. Huge, huge step forward for Palantir.
Karp telling me, Dan, Alex Karp, CEO, told me there is no one in software even remotely close to the numbers at our scale, he was saying. Listen, you cover a lot of tech names, you cover a lot of software names. Do you agree with that?
There's nowhere close. I mean, if you look what they're doing, I mean, look, I've covered tech 25 years. This is unprecedented territory. It speaks to our view. It's $1 trillion market cap in the next 2 to 3 years. I mean, they are, look, godfather of AI, Jensen, NVIDIA, Microsoft. You look at Alpha. You look at, obviously everyone that we see in terms of big tech. Palantir's right there.
Let me ask you, Dan, heading into this print, this stock was up 560% over the past 12 months, okay? Just a rocket ship. And there are some analysts on the street, Dan, smart guys like yourself, who've been doing this a long time like yourself, who will say, listen, I like the company, I like the tech, the fundamentals look solid, but they don't recommend the stock to clients, Dan. You've seen this because it's the valuation. They'll call it, in their words, an irrational valuation. What is your response to that?
They hate it at 15, despise it at 50. Screaming from the mountaintops at 100, and I think at 200 they'll be doing the same. Look, Josh, we've talked about if you focus just on valuation over the next year, you've missed every transformational tech stock the last 20 years. And Palantir, I put in the same category.
Let me ask you, Dan, if it's not valuation then, and you're bulled up on Palantir, you've been right for a long time on this name, but the clients must ask you, Dan, okay, it's not valuation, what are the downside risks that I need to consider? Would it be competition, Dan? Is it product fit? What would the risk be?
Look, you could say valuation, macro, those are obviously, other issues that we could see come through. But the reality is that it's still early days in terms of where they're going. I mean, my view, they're basically creating a whole nother business in terms of the commercial business. Then you look on government, they're gaining more and more share on government. It's kind of a 1-2 punch. I think Karp's just playing a different game, right? I mean, I think he understands on par with Jensen and Nadella in terms of where this is all heading.
I see some analysts on the street, Dan, they do their checks with retail investors on this name, and they say they hear more interest about 2 issues with Palantir. They're hearing chatter, more interest in potential stock split, and capital return. And I'm just curious what you make of those dynamics.
Capital return, I don't think is much of an issue because you're at the end of the day, you're focused more on this is growth mode. In terms of stock split, look, I think that could clearly happen, right? I mean, just given what we see, especially today and where this is going forward. And they are in a massive position of strength. And it goes back to like the last few years institutionally, this has been one of the most hated names I've covered in 25 years, but they just continue to execute. And I put in a rare category, almost a Mount Rushmore in terms of where I see them going. In
terms of the rare category, Dan, though, as you try to look across the competitive landscape, who would you consider competition? Who would you consider rivals or even potential rivals down the line?
Look, Snowflake's competition, you could argue Oracle, Microsoft competition, but to some extent they're partnering with them. Look, there will be competitors. This is not, I mean, they're not the only game in town, but they're just miles ahead from a technology perspective and what I hear from customers.
What do you hear from customers when you ask them? What do they tell you?
So unlike anything they've ever seen in terms of use cases and what Palantir can do relative to a lot of these other companies. And remember, they hardly basically have a direct sales force. I mean, that actually just makes this that much more pretty unbelievable in terms of these numbers.
How much credit, Dan, at the end of the day, do you give the C-suite here? Do you give to Karp?
It's gold standard. I mean, what Karp's done is it's a Hall of Fame performance. I think if you look what he's done, how he's built this company.
Do you see any evidence of these numbers? I mean, listen, I just see a lot of beats across the board. Do you see any evidence of these numbers, Dan, of any kind of macro or even downstream tariff-related impact?
I mean, look, these are numbers. Of course, you always, could they have beaten by more? Could they have raised? I mean, John, these are day plus quarter. I mean, in terms of what the street was expecting, beyond bull case. So there's nothing here that makes you any less, but you're more bullish relative to the numbers.
Joining me now, Jefferies analyst Brent Thiel. He has an underperform rating and a $60 price target on Palantir. Brent, great to have you weigh in here. I know that you've kind of been dealing on these two tracks when it comes to Palantir. The fundamental performance continues to be impressive. It's hard to make peace with the valuation. What did this new report tell you along those fronts?
I think what it tells us is Palantir is operating at a level in the software industry that we haven't seen ever before. For a company to put up 45% growth and a 45% plus operating margin, no one in the industry is doing this. So every software CEO is taking notice and trying to figure out what is happening. Dr. Karp's announcement to you this morning that he would like to do this with fewer employees and grow 10x the revenue is also a huge wake-up call for all of us that AI is going to take our jobs. And so I think right now we're just seeing a company that we've never seen before in the history of software as it relates to the balance of growth and profitability. And if you put this in perspective, their market cap today is bigger than Adobe and Salesforce combined. And those companies have $70 billion of revenue. And Palantir next year is on 26. Palantir will have $6 billion. So, the market's forward paying for this in a big way. We haven't ever seen multiples at 75 times forward revenue. It's never sustained. We've had 4 quarters of accelerating growth. And so what we've said is that at some point, when that growth just decelerates a bit, so will the multiple. And that's the biggest concern. But look, there's nothing to be concerned right now. They're executing incredibly well. And again, I think it's a scary moment for everyone to realize that they think they can grow 10x with fewer employees. Now, they added headcount in the quarter. They were up pretty materially. So we'll see if they can hold court on that. But again, I think we're just seeing basically a story we've never seen. And it's really hard to judge because there isn't anything relatively anything near it to judge it against.
Right, which I guess maybe helps explain why it's gotten to above $400 billion in revenue, because people you can tell yourself any story. I'm sorry, $400 billion in market cap, because you can tell yourself any story about just how steep this curve is going to be and how long it's going to stay that way. The talk about reducing headcount at Palantir while having this stupendous growth is interesting in the sense that you are a little bit concerned about their sales model, right, where they're not really going going out into the field with a traditional sales staff and trying to, to get new clients?
Yeah, I mean, again, this super unique story, which is their deployments and their customers have spoke for themselves. So this is testament to how good their products are, that they don't need a big sales team. On every single call, Dr. Karp has said this repeatedly, that we have a tiny sales team. And he believes in no-steak dinners and golfing on Fridays with clients. He believes in producing a great product. That speaks for itself. That then spins the flywheel. And again, something super unique we just don't see across the industry. The one company, Atlassian, started this way, and now they're having to invest in a direct sales team. So I think, again, what's really different are the growth rates, the go-to-market model. And again, this speaks to the testament of how good the products are. We've spoke to many customers, and the customers are very happy. They're increasing their spend. They believe in the product. So this isn't necessarily any hocus pocus in terms of the product not working. This is a solution that works and is being driven, and sales and marketing is being driven by success of those customers rather than the steak dinners and the constant sales interaction, which again is another model that many are using in the industry and are following them.
Yeah, I bring this up not because you mentioned steak dinners and golfing, but I was trying to think of analogs for a stock that had this huge run, in its first few years as a public company. Everyone said it was too expensive all along the way, and that would be Salesforce. Now, it had nothing like this revenue multiple, but certainly on an earnings basis relative to its peers at the time, there was a constant kind of big pool of skeptics out there that said, they can't really grow into this valuation. Is there any kind of rationale to that comparison?
There's been no real comparison. I mean, we've seen through the years, right, during the 90s and 2000s, Siebel and what happened there. We saw Snowflake go to 50 plus times revenue, and then the multiple came back to single digits, and then recouped the multiple, and now is low double digits. We see two stocks right now that are, great companies like CrowdStrike and Cloudflare. They're between 18 and 25 times revenue, but then the gap to get from Cloudflare at 25 times to 75 times in Palantir, there's nothing in between. So there's no cities to stop at in between those multiples. So the highest multiples we've seen, again, most of them have come back because you can't sustain that growth for that period of time. So again, we're not saying they can't do it. We're just saying we've never seen it before. And I think that's a hard thing for many of us that have been doing this for a while. There is no comparison.
Right. Yeah, and we know the company, kind of looks to directly sell itself on an investor relations basis to retail investors. The street's been a little bit of a skeptic all along. We'll see where it goes from here, Brent. Really appreciate it.
When you doubt it, it smacks you in the face and says, we can do it. We can do it. We can live up to this high expectation.
These are staggering numbers. Fundamentally, when you combine the revenue growth with the margins, I know the rule of 80 is coming into play here, the combination of that, but they have delivered here beyond the expectation, and the expectations were obviously and needed to be remarkably high. I do think, and I mentioned this yesterday on the show, the analyst community, surprisingly enough, really wasn't embracing the type of price action. There was skepticism there. The 12-month price target was $116. We've got a lift in that today to $142. So look, quite candidly, I'm relying on the rules-based nature of the ETF strategy, which has been in the position since January of 24. There is no way, if I had discretion over the account, I would have kept us in Palantir for the entirety of 900+%.
Well, look at the move. Let's go back. Let's go. Show me the chart prior to one you just put up. From the April low until right now is extraordinary in and of itself.
Absolutely. And listen, when we declined in April, I was at that point saying to myself, okay, this is a shakeout that could take this stock back down to $50 or $60, and I was wrong there as well. So I'm relying on the rules here to keep us in the position, but you have to credit this company. They are absolutely delivering on all the fundamental metrics. So if you're skeptical here and you're just blaming price, if you're saying, no, this is just a representation representation of momentum. It's the reason why, and trees don't grow to the sky. It's more than that. It is actually delivering on the fundamental AI story.
Not all momentum type names are created equal. Deutsche Bank, to Joe's point about the analyst community not necessarily buying in, so to speak, Deutsche Bank throws in the towel today. They had a sell call on the stock. Current valuation still challenging, they say. Can't wrap our arms around that, but our conversations with multiple customers in the company over the past several months have further reinforced the view that something special is going on here. That doesn't underscore the really? I don't know what does. So they're at hold. They can't bring themselves to buy it because of the valuation questions that they continue to have, but they have taken it off of sell. Josh Brown, why know you here? Why don't you own a name like this?
So we have exposure through the S&P 500. This was added on September 23rd. I'm one of these idiots that's worried about the valuation the entire way up. And I don't always do that. And in this particular case, I just absolutely missed. I missed on the story being as powerful as it is fundamentally, just purely in terms of the growth. This was never a cheap stock, all right? So it's up 124% year to date. Even at those April lows that you just put the chart up, there was no like opportunity. It was never selling at any sort of a discount on like price earnings growth, just literally never. And this is a hallmark of some of these classic growth stories where they just don't let you in if you're thinking with like 1980s or 1990s brain, because that's not what's moving the stock. What's moving the stock, they have signed almost 1,000 customers. Forget about all the government contracts, which are, of course, huge and a major part of the story. Alex Karp spent a lot of time in his remarks talking about the business customers, the commercial customers, and commercial revenue was up 93% year over year to $306 million. The government revenue only, I say only with air quotes, rose 53%. So a lot of people are looking at this like a defense contractor, but in fact, their commercial business is growing at double the rate on a year-over-year basis. Now, they're guiding to $4 billion in revenue this year, which is great, but the market cap is $400 billion. So it doesn't make sense where the stock is trading, but I understand it. I listened to the call. Alex Karp is the new Elon Musk. Yeah. He's downright messianic. He comes on the conference call, and like one of the first things he says is, sorry to the haters. The new class of investors, they love that. They care more about that than anything a sell-side analyst who's accustomed to covering Lockheed Martin learned in business school. So that's the component of this that I missed. Not only are they executing, they're doing it with swag. That's what investors want. And you look at like growth managers who are not in this name, and they have a mutual fund with 200 positions, and Palantir is not one of them. You ask yourself, who the hell is buying this stock up 7% today after this huge run? That's who. I'm not. I don't have to do that for a living, thank God. But a lot of people do, and that's where that buying pressure continues to come from.
Karp's the kind of guy who he kicks you know what, and then he gets in your face afterwards, and he tells you that he just did that. And I mean that as a compliment.
Look what he just did.
Clearly the market
can't
does,
argue
and
with
investors
it.
seem to
By the way,
I'm not arguing with it.
Karp doesn't set the valuation. Karp manages the business. And this company, with a Rule of 40 score of 91 or 92, you can't make a chart of that and put other software companies on the same chart. The scale, like they wouldn't. So what he's doing is amazing. He doesn't decide the market value is going to be $500 billion on $4 billion in revenue. That's not up to him. That's what investors have decided.
Right. There are, if you want to use air quotes, we can put it around culty stocks. Maybe this has entered that universe like Josh was talking about regarding Musk and Tesla.
Palantir has bedeviled many of the analysts who covered the company ever since it came public almost 5 years ago. They have a difficult time evaluating it because it seems so overvalued. The software company / AI consultant trades at over 200 times next year's earnings estimates, making it the most expensive stock in the S&P 500. And look, if you're relying on traditional metrics like most analysts, Palantir's valuation looks psychotic. But I think Palantir is one of those rare stocks that defy standard analysis. When we're dealing with fast-growing software companies, I don't use earnings per share. I like to judge them based on something called the Rule of 40. It goes like this. You take the revenue growth rate and some measure of profitability, maybe the operating margin, maybe free cash flow margin, and if they add up to more than 40, your stock might actually be cheaper than it looks. Palantir's revenue growth accelerated to 48%, and its adjusted operating margin stands at 46%. That's an extraordinary combination that yields a score of 94. That's on the Rule of 40 test. I follow huge number of stocks. I don't know a single other one even remotely near that terrific number. Palantir may be cheap, maybe incredibly ridiculous on earnings per share, but on Rule 40 yardstick, it's ridiculously cheap. I'm not kidding. Mind you, Palantir's exalted status is not based on small numbers. They had $1 billion in revenue this quarter. 2 years ago, they did $2.2 billion in revenue over the course of the entire year. What makes Palantir so elusive? First is the seemingly bombastic claims of CEO Alex Karp. He says that because his company is hyper-efficient, he expects to get 10 times the revenue that the company has with 3,600 employees. They now have 4,100 employees. People hear that and they say that's absurd. But I'm willing to give Karp the benefit of the doubt because he keeps delivering. I think he's going to hit his target. The other problem here, people don't really know what Palantir does. This quarter, they gave two solid examples that hint at the style and breadth of what they can do for an organization. The chief revenue officer, Ryan Taylor, points out that Citigroup shared that the customer onboarding process and relevant know your customer and security checks that once took 9 days now takes seconds, thanks in part to Palantir. Or how about this one? Quote, Fannie Mae recently announced they're working with Palantir, decreasing the time to uncover mortgage fraud from 2 months down to seconds, saving the U.S. housing market millions in future fraud losses, end quote. And yes, I am trying to be as dispassionate as possible because the rah-rah rhetoric and the special terms that the company uses to describe its business leave a lot of investors cold. I mean, who the heck talks about ontology in this business? When Karp says that the quarter is a, quote, once-in-a-generation, truly anomalous quarter, and we're very proud, and we're sorry that our haters were disappointed, but there are many more quarters to be disappointed, and we're working on that, too. He sounds like a paranoid maniac, but he's actually he's a sane speaker. The bluster has scared professional money managers away from the stock, even as it delights the amateurs who bid the stock up endlessly, both before and after the market. I've been behind it the whole way. When it was at $50, I said it would go to 100. When it got to 100, I said it would go to 150. And when it got to 150, as it did last month, I said it will go to 200. We're already well on our way. How did I know this? Because of the Rule of 40 valuation method, and it truly does work. Palantir might be able to keep working its magic for years. It's the steadiest high flower I've seen in ages. But if the stock's going to keep climbing, the bears need to keep betting against it. Those are the people who don't understand Palantir's greatness. They are the ones whose backs this remarkable run is built upon. Once all the bears become bulls, that's when you run out of upside. Fortunately, that hasn't nearly happened yet.
This equals the most that they've ever beat a quarter by. And that's a pretty remarkable feat when you're talking about a company that is now at $4 billion of annualized revenue.
Not to mention that it has grown so rapidly over the last year. That stock is up 600%. There are some out there who say, wait a second, can it really keep up with the accelerating stock price? What's your answer to that?
So I would say it's a tale of two cities. On one hand, you've got a company that is truly hitting on all cylinders. As I said, 48% revenue growth. Their top 20 customers on average are spending now $75 million per annum. They have revised guidance in a way that we haven't seen any other software company do so far this year. For example, their U.S. commercial business, which is a little bit over 30% of revenue, they started the year, Becky, at guiding to at least 54% revenue growth. They just revised that to at least 85% revenue growth. And so, again, it is pretty stunning what they're doing. However, it is also stunning in terms of the valuation multiple that they have attained. And so based on our revenue numbers for next year, they're now currently getting about 80 times next year's revenue. Now, if I compare that to our basket of high growth software companies, in our universe, they are trading at 6x that basket, which is at 12 to 13 times. In fact, Palantir, if I were to compare them to the next highest multiple stock, which is Cloudflare, Palantir is trading at a 3x premium to that company. So we love what Palantir is doing. Again, they're executing better than anyone, in my view, right now within software. But obviously, there's a price. And what is the company worth? And so that is the the challenge from here as well.
But your price target is roughly in line with where the stock is right now. So you must think it's worth what people are willing to pay.
It is. We think so. And the reason why is if you look at the rule of 40, which many software companies and some other tech companies look at very closely, where you're combining revenue growth with operating margins, 40 is considered a standout result based on these two metrics in combination. What Palantir just did this past quarter is over 90. Now, if I were to compare that to the rest of the software space, and this is specifically the best-in-class software companies, Palantir's rule of 90 plus is roughly 2x anybody else in software. So because of that, at least significantly because of that, there is no question that they deserve a very substantial premium in our view to the rest of the universe. Now it just comes down to what's the risk reward and how much more multiple could they really get. And so that ultimately is the challenge.
Just last week, the U.S. Army said that it might purchase services of up to $10 billion from Palantir over a decade. How much of this is driven by what the United States military is saying and then by other countries as well?
So this really is, I think, heavily driven by the U.S. Naturally, we are in an escalating geopolitical environment. The U.S. Army has made already some very substantial commits to Palantir, and this, we believe, is going to be an extension of that. The only comment that I would make here is the $10 billion is not a promise. It's not a guarantee. That effectively is the cap in terms of how much the Army can spend with Palantir over that 10-year period, but certainly it's going to make it more frictionless where they can add projects and spend more with Palantir without going through as much effort as it relates to procurement, et cetera.
It's so interesting listening to Alex Karp. He can tell you little bits of things. He can't tell you everything because obviously a lot of what they do is classified. As an analyst, how do you try and sort through all that and figure out how to value the company?
It's a terrific question. This is a company where it is just harder, for instance, to do channel checks. As you mentioned, the government contracts are shrouded in secrecy, as they need to be. The commercial business, I will say Palantir is doing some more work with partners, but a lot of those deals are signed directly. So there's only so much, corroboration that you can sort of get in the field, so to speak. That being said, what we have heard and what we wrote about in mid-July when we did upgrade the stock is that there has been a very significant uptick in inbound inquiries from companies, specifically enterprises, inquiring about Palantir and trying to get closer to understanding what this company can do for them, what use cases they can deploy, and how they could add value. And so that we found very interesting.